Hey everyone, it's Jay Soloff from Investors Alley, and this is our options trade of the week. So I'm here at Market Chameleon looking at the unusual options volume page, which is a good place to see where the action is. So I'm going to look at a couple things here, but as a reminder, this is not a recommendation from one of my trading services. This is a trade I'm showing for educational purposes only. So as I said, I like to look at this unusual option volume page from Market Chameleon, and at the top are two familiar companies here, Pfizer and Moderna. Why are they both familiar? Well, they're the two biggest vaccine producers in the U.S., at least in terms of COVID vaccine. Pfizer and Moderna were both the MRNA type of vaccine and were very popular, the first two to get approved in the U.S. So you can see both of them are at the top. Now, obviously, there is the concern of the spike of the Delta variant, and so we're seeing a lot more talk about vaccinations, so that's part of it. But there's some other things going on, so we're going to look at Moderna more specifically. And you can see it traded 4 times the regular volume. Normally trades about 100,000 shares of contracts of options, which is a lot, but actually traded over 434,000 on a given day today, and you could see 62% of them were calls. Now, you can't always tell a lot from put-call ratios because the way they're combined or whether they're bought or sold means very different things. But when you see a lot to one side or the other, it usually is a sign. A lot more calls tends to be bullish, vice versa with puts. The stock was actually down 6% today, but it's been on a tear. So let's take a closer look at some of the trades. Once again, I like to sort by quantity. Let's see what some of the bigger trades are. Now, what happened with Moderna is that recently got approved for use in Australia and for 12 to 17-year-olds in Switzerland, and along with news that is probably the most effective vaccine against the Delta variant. So the stock has been skyrocketing, but it just got to a point where it was a little top heavy, and you have B of A analysts, a Bank of America analyst coming out saying the valuation is ridiculous or whatever. So, and of course you never know in this environment. Valuations are very subjective. But that being said, the stock did open up high and then drop about 6% by the end of the day. And someone seemed to have timed that pretty well by selling August 20th, so just the next major expiration, just about 10 days from now, selling the 600 calls. So with the stock at 472, they sold the 600 calls that expire in 10 days. So first off, that's interesting because you're like, well, 600, that's a long way away. And it is, but they were still able to get $4.50 from those calls. So obviously a lot of volatility on the call side. They sold 6,500 of these things for almost $3 million in premium. So, you look at this and you see, all right, well, stock could get over 600, sure, yeah. But then you think, is it going to get over 600 in 10 days? And is it going to, is it really worth $4.50? And the answer is no, it's probably overpriced there, but it's a dangerous trade to make because you never do know in today's sort of meme environment how high a stock can go in a given period. That being said, the stock pretty much immediately reversed and closed at 456. So this trade already is probably making a lot of money. Wouldn't be shocking if we see them close it tomorrow even and taking profits. But most likely, just want to say again, most likely this is not a naked call sale. It's being hedged somewhere else. Delta hedged with stock somewhere or hedged with other options. So when you see a trade this size, people aren't doing this for just throwing that out there without some kind of protection. So not the sort of thing you should do at home. You could do a call spread or something like that if you want to, or a covered call if you're looking to do a similar sort of trade without the risk. That being said, this one did work out. As you can see, the stock has just been on a tear and then finally had a big downturn today on news that, essentially that it's probably overvalued, which is not a shock, but still mostly good news for Moderna instead of, I think it's just the buying kind of got long in the tooth, right? And someone did a really good job of timing that. And you can see here, let's go all the way up to the 600, and it's half the value. 10,000 of those actually traded today, and so probably were sold throughout the day. Maybe some people actually buying it thinking of a rebound, but this person already made about $2 on the trade, so they could conceivably close it tomorrow, or maybe they closed it later in the day in smaller blocks. Who knows? But 6,000 of that 10,000 was from that one trade. You could see if you were just selling it outright, you would have unlimited risk. Once you get above 600, you can't really see on this chart because it's compressed, but obviously a long way to go before this would be a losing trade. That being said, probably best as a covered call or a call spread if you're interested in doing that as a credit sort of strategy. If you're interested in just call and put buying, though, you can look at the link on this page, Option Floor Trader Pro. That's my call and put buying service. Check it out if that's the sort of thing you're interested in. And I will be back next week with another trade of the week.